Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, May the 30th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't even know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Across the pond, we got Japan's consumer confidence came in at 43.6, expected to be 43.9, so decent right there. We also got retail sales from Germany coming in at 2.3%, expected to be 0.5%, so much better than expected there. And then they revised last month's number up from a negative 0.6 to a negative 0.4. Import prices for Germany came in at 0.6, expected to be 0.7, so pretty close to in line there. And German's preliminary CPI consumer price index came in at 0.5%, expected to be 0.3. So for Germany, it looks pretty good. Consumer sentiment or consumer spending out of France came in at negative 1.5%, expected to be a positive 0.2%. Preliminary GDP out of France came in at 0.2%, expected to be 0.3%. So Europe on the from Germany looks pretty good, but French are looking a little shaky. Then back here, one more, Spanish flash CPI came in at 2.0%, was expected to be 1.7%. Now on to the United States. We got the ADP non-farm payroll change came in at 178,000, expected to be 191. And previous number came in a lot lower than expected at 163,000, expected to be 204. Now, a lot of people like to look at this ADP non-farm payroll because it usually comes out right before the real non-farm payroll, which should be on Friday because it's the first Friday of the month. Every once in a while, they'll skip it over when there is not enough economic data and they'll move it to the next Friday. But it's first Friday of the month, and this Friday being no different. Sometimes with that holiday falling in there, they'll skip it out. But we've got a couple of days to compile that information for them, and they will be able to get that out for us. That being said, ADP very loosely tied. Not a lot of traders will trade off that based on what they expect to see on the non-farm payrolls. Supposedly, it's supposed to give you a pretty good idea. And then finally, we got Beige Book later on today. Beige Book is a great one because the FOMC coming out in the beginning of June, they get a couple other numbers that are a little bit, are released a little bit closer to the FOMC meetings, but we don't get to take a look at those. The only thing we get a look at is Beige Book, and it's supposed to very closely mirror what they get, albeit a couple of weeks ahead of time. All right, and that's about it for the economic data. Let's look at the overall market. It's almost like nothing happened yesterday, you guys. But with crude oil moving higher today, I talked about this in the daily market commentary yesterday. If it settles outside of this trend, there is going to be some serious downside possibly, maybe even all the way down to here is what I started thinking yesterday if we were going to settle down there, at least to the point of control or the 23 Fibonacci level. But yesterday's rally late in the day made that settle inside of my trend channel, and today confirmation to the upside. So put on a USO trade for that I'll talk about here in a little bit. Gold futures rallying again yesterday. They were looking like they were falling out of bed and going to stay below 1,300. But then again, we got a nice rally late in the day and it settled above there. So back in the 1,300s for the gold bugs. They're going to be loving that from that flight to safety trade. Bitcoin not really getting it. Yesterday they did try to make a flight to safety, but not a whole lot of people were biting on that. It started looking like we were maybe making a bottom here. Not so sure right now. I think we need at least a settlement above yesterday's high of, what is that, 75.60. So anything above that 75.61 or something like that, maybe even a 75.60 settlement would be good enough to be a confirmation of a little bit of a bottom here. On to bonds. Bonds coming off, basically retracing almost all of yesterday's move. We did open up really low and rallied like there was no tomorrow. It was really a rip your face off rally in the bonds yesterday. Fed fund futures basically took out about a 15% chance of a rate hike yesterday at one point. So it was a 90% chance of a rate hike in the June meeting. Then they moved it back down to about a 75% chance of a rate hike at the June meeting. Anytime inside of a week, the Fed fund futures are a very strong indicator as to what the Fed is actually going to do. The Fed, believe it or not, looks at Fed fund futures to see what the broader market is thinking, and that helps determine some of their policy moves as well. But today, almost half back at least, and all the way back to the previous day's open. I mean, it's just all over the place. We were up into the 18s yesterday in the VIX. Remember, when I was doing the daily market commentary, I was hoping for the 15s, and we blasted off straight to the 18s, almost tried to get to the 19s. But again, today, almost full back on the VIX, as we'll see that show up many times. We got the Dow Jones Industrial Average up almost 300 points, 270. But you can see we're higher than where we were on the open of yesterday. So we are back to where we were last week, basically. And we can see that show up in the NASDAQ. Massive rally yesterday late in the day, and it continued on into today. And the overnight session was just a full-on rally. Again, E-mini S&Ps, almost a full retracement for the most part, right back to where we were yesterday, up 30 points, almost 31 is what I was talking about. Yesterday when I do the daily market commentaries, I'm probably coming in right around here to talk to you guys, and that was about the low of the day. You can see almost unabated to the upside all the way into today's day trading session. So a massive rally the last couple of days. I guess everybody realizing maybe Italy isn't that major of an economic mover to make us really kind of be that concerned. Therefore, we are rallying today. It's not really based on great economic data. The only good economic data we really got was out of Germany. All right, Procter & Gamble's moving a little bit higher today, but I took this as an opportunity to get short some deltas. This sector has just really been struggling, so I decided to add some negative deltas with Procter & Gamble on the move higher today, and went in and sold the July 77.5 calls, and then defined the risk by buying the 85 calls. Did that for 42 cents. That was in my in my IRA, using that 85 call to define the risk, limit some of my margins. So it's not an illegal trade in there, but I'm not going to write that out to the 85 calls to define my risk. I'm going to be very practical about that. But as you can see here, getting short the 75 calls is way up in this consolidation area. So it's going to have to try and cover that gap in order for me to really worry about it. And I don't think it's going to make it up there. I think we're going to get a bit more of a rollover here in Procter & Gamble. Forgot to talk about my margin account in Procter & Gamble. I went in and sold the July, just sold the 77.5 calls in there for 45 cents. And so playing that to the downside in both my margin and in my IRA. On to Disney. Disney, I decided to also play to the downside. We just had the Solo, which is the new Star Wars film, did not do very well in the box office. That's what most of yesterday's sell-off was. It was also exacerbated by the broader market sell-off. But today you can see as the broader market's moving higher, Disney is still struggling. Albeit a rising tide lifts all ships. This, I don't believe, is going to stay afloat, at least not for the near term. So I went in and sold the July, sold the 110 calls in there for 34 cents. Also over in my IRA, I did the same, I skipped out on the Disney trade for my IRA. But what I did do was add the USO, which I kind of hinted about earlier when we were talking about crude oil. playing it to the upside. Nice move down, confirmation off of that yesterday's low. That just is a nice little bottoming pattern. So I decided to play that. That's going to act as a solid area of support. So I decided to go in there and buy some 14 calls. Being such a low valued underlying $13, high implied volatility doesn't really help you out that much. You can't really sell premium in stocks or ETFs that have this low a valuation, despite the fact that they have really high implied volatility. So I just decided to buck that and go in and buy some USO. I basically played this out in both of them. One, I'm trying to make an example, and just hopefully it'll play out. But I went in and did the June, bought the 14 calls in there for 21 cents. And then over in the July, I went in and bought the 14 calls also for 44 cents. So just doing a little bit of a play there. I want to see how those both work out, if I get my directional assumption right. And we will be able to have some data for future reference. Also, over in my IRA, I just went in and did the July on the long dated, following my rules in that, and bought the 14 calls for 44 cents. But wanted to play around with those near duration gamma trades in the in the June. So that was more of a play on gamma that I'm going to be talking about later. So I wanted to play both of those at the same time. Hopefully I get my directionality right, and I will have some data to talk about for you guys. And that's about it, other than tomorrow is the webinar. It's not Friday anymore, guys. It's tomorrow, and we're going to be doing it on the long put diagonal. It's going to be a really good one. Great trade for setups after earnings. We've gotten through all these earnings. Now it's kind of like that little lull. What do? How do we play these low implied volatility environments, expecting volatility to expand? I will talk all about that tomorrow in the webinar, so check that out. Also, give me a thumbs up, thumbs down, like or dislike. Tell me what you feel about this video. If you don't like it, give me some feedback so I can make some changes and kind of make this honed in your liking, if you will. All right, that's about it. Other than, if you can't take that, take it easy.